Hey guys, you've joined us live on Money Control. I'm Manisha Gupta, and the spotlight clearly is on crude oil prices, where we have seen them trade at a 10-month highs at $90 a barrel. And it has been a very strong run-up that we've seen come in for the crude oil prices. We will list out the details on why we've seen crude oil prices jump so high, and the reason being that we are looking at Saudi Arabia and Russia, both of them actually cutting output. The crude oil prices have firmed up even as the US dollar is trading at a 6-month highs, but it clearly belongs to the OPEC and allies, the reason for the run-up in crude prices. Saudi Arabia has extended 1 million barrels per day of a cut until end of December. The cuts, remember, began in July 2023. Russia as well has been cutting output, and they will do it by 300,000 barrels per day of an export curb until December end, and that has been supportive. The markets also are looking at a big price volatility and getting ready for that. This is what we've done in sense of prices in this year. We started with $82 a barrel. We saw prices decline to $70, and we're currently trading at $90 a barrel. But let's remind you that in last 2 weeks or 3 weeks, we've seen prices gain up by nearly $8 a barrel from 82 on 23rd of August. We are trading at 90 right now. So if you look at the forecast coming in for crude, that also is on the higher side. Saxo Bank is expecting $94 a barrel. Probis is way more bullish. They're expecting $100 a barrel. And that is what the Indian brokerages also are telling us. So whether it's ProIntelliTrade, Axis or GCL, they're expecting that the crude prices will jump up to 95, 99 and even 107 on the higher side. So the trajectory clearly seems to be going up and up there. This is some more brokerages in India, and they're expecting 80 to 95 of a range, $100, 107. So yes, with the kind of run-up that we are seeing, one thing is clear, that the days of 60s and 70s in case of crude oil prices clearly seem to be done away with. We are now joined by Anuj Gupta of HDFC Securities to take this conversation forward. Anuj, hi, thank you so much for joining us. What is your sense on where the crude prices could be headed? We'll discuss the fundamentals later, but the price view first. And how are you looking at the rest of 2023?
Manisha, good afternoon. If you see last this year from Jan to the till date, crude oil price increased by almost 4.32%. But if you see from June to till date, it's increased by 22.67%. And in the month of May, we saw that crude prices touched the low of $70 per barrel, and right now it's trading around $91 per barrel. So it means prices are trading around, you can say, a 10 months high level on the back of supply cut by Saudi Arabia and the Russia. So both the countries which are producing a lot crude oil and all curb the supply. So this will impact crude oil prices, and we have seen that crude prices increase sharply in last a couple of weeks. So as far as concern about the supply side, definitely winter demand is coming, and I'm expecting that due to this winter demand, the demand surpass the supply by 2.7 million barrel per day. So however the demand is increasing, supply is coming. So I'm expecting that the coming the time it is looking positive for the crude oil prices, and I'm expecting it may test $90 to $95 per barrel in a very short term.
Anuj, what would that mean for Indian traders and investors who work with MCX?
Definitely, currently crude oil is trading around almost 70 to 100 per barrel on MCX. Since the month of June, it increased by almost, you can say, 22%. So the overall trend of the crude oil on technical chart is looking positive. Fundamental is also supportive. Technical is also supportive. So I am expecting it may test 7,500 to 7,700 rupees on MCX. As far as concern about the open interest and the positioning, so both are increasing on a higher side. So as for the concern about the technical perspective, I am expecting it may test 7,500 to 7,700 rupees on MCX.
Okay, well, that's about the price views, but people, you would be looking at a lot of volatility going forward into these markets. So what are those factors, fundamentals, that you will want to watch out as we move ahead from here? China demand is going to be an important one. How are you looking at China bringing up the kind of stimulus measures that we've seen coming from there?
As far as concerned with the China, we are expecting some stimulus package, but stimulus package is not there. Slowdown situation is there in US and China, and due to this, we saw that Saudi Arabia and Russia are cutting their production. So this is the main factor where both the participant cutting their productions and the price are increasing. So this is the major factor which will play a role in the coming time. And the second one would be the demand. Because the winter season demand definitely is there, and as we are saying that 2.7 million barrel per day, demand will increase in the coming months. So this will also part of the impact. And the demand from China is still not expecting coming from the China, and the US is still there. And the one more thing is that the US inventory is also on a lower level since 2022. So this is also the supportive part for the price rise, and these are the factor which will play supportive factor for the crude oil prices.
Now, let me also come to the fact, the reason that we have seen crude oil prices run up so strong, and that is the output cuts from Russia and Saudi Arabia. December end is what they've already said. They've also said that they could be looking at more price moves, more policy measures rather, as and when each month passes. What are you anticipating from them?
Policy makers definitely we are keep eyes on the Fed decision, as dollar index trading above 104 levels, and crude oil disregard this dollar index. Generally, we have seen that the negative correlation between crude and the dollar index, but right now we have seen a disregard correlation that crude oil is disregarding the dollar index, and it is now rising on a same tandem. So Fed Bank is definitely, using this hawkish statement, and they will increase interest rate by, in this year one time. But they are also saying that they will not looking so much aggressive in the year of 2024. So possibly we'll see some, some stoppages may be seen in the crude oil prices, or the interest rate increase high. So that will impact on again as a speed breaker for crude oil prices. But now, for next 3 to 4 months, I'm expecting a hawkish statement from the policymaker, and that will again impact on the crude oil prices.
All right. So whichever way we see, there is some bullishness that can come in for the crude oil prices. Since we have you with us, Anuj, a final question on the natural gas prices also, because we've seen the prices kind of consolidate at these current levels, holding above 200 rupees in MMBTU in MCX. Any strategy, any view there?
Definitely, Manisha ji, natural gas is also the part of the winter season, and as prices are trading on a, you can say, a multi-month low. In this year, we saw that it tested the high of 800 rupee on MCX and almost $10 on international market, and right now it is trading around almost $2 kind of level. So prices on very low levels. I'm expecting that this is the price where trader can go for buy for in the view of winter season demand. So I'm expecting that natural gas price will increase from here, and possibly it may test 250 and 300 kind of level. On an international market, it may test $3 to $4 per MMBTU. So demand is there. So demand concern definitely will play the major role for that, and I'm expecting that coming 3 months will also be positive for the natural gas prices.
Fair point that. Anuj, thank you so much for joining us. So, well, that's a cue coming in from the crude oil prices. And as Anuj pointed out, there is winter demand, hurricane impact will also come in for the crude prices. So, whether it's crude or natural gas could be in bullish territory going forward.